The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 8th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. Life, folks. Life is a gift, and it offers us the privilege, the opportunity, and the responsibility to give something back by becoming more. Question: what are you doing today to become more out there? You know, we should always remember that a real decision is measured by the fact that we've taken new action. If there's no action, then we haven't truly decided. And speaking of decisions, you know, using the power of decision, that's what gives us the capacity to get past any excuse to change any part in our life. And we can do it how fast, folks? That's right, in the snap of your fingers, in a heartbeat. Action is what unites every great success. Action is what produces results. Knowledge is only potential power until it comes into the hands of someone who knows how to get himself or herself to take effective, massive action. In fact, the literal definition of the word power, well, that is called the ability to act. Let's go check on the actions of these markets here right now. You've got the Dow up 112 points, trade at 15,247. S&P up 11 at 1643. The composite up 12 at 3491. Russell 2000 up 4.5, breaking out over its May 22nd high. That is trading right now at 1009.92. We got Google up 11 bucks and change. We've got Apple off $1.88. Microsoft up 24 ticks. Intel down 77 off 3%. We're going to have to go take a look at Intel, see what kind of volume we've got behind that move out here. Priceline lead the charge, the upside up 25 bucks and change. Google up 11 bucks just behind them. Netflix up 465. Amazon up 435 out there. To the downside, you've got the ProShares Ultra VIX. That's off for about 7% here. That means the VIX is trading lower. We've got Noodles and Company NDLS. That's off about 5%, off 2 bucks and change. Apple right behind them. Our call number 877 927-6648. We've got Goldilocks trading up 20 bucks right now at a 12.32. We've got silver up 31 pennies at 19.05. Light sweet crude back about 90 cents right now out at 102.35. Over in Europe, they are still having a party out there. You've got the DAX. It's up 2.5% at up 194. FTSE up 96. Let's start off by taking a look at the S&P 500. Let's go see what that is trading into. Well, you know, we've had a couple of lines here drawn on the S&P 500. The longer-term line is the black diagonal line coming up off of the November 16th low out here. Your touch point is that November 16th low, 1343.35. Your next touch point is going to be the low from December 31st, that area at 1398.11. When you break a trend line, what the market often does is it goes all the way back up to test that. It tries to get back inside that original trend. Again, that's we'll call it an intermediate term trend because it's off of the November lows out here. We know that low was busted with conviction to the downside. That was done on June the 20th out there. And as we take a look right now, what we can see is price here with the S&P being up, a total of 11.5 points right now at 1642, is running right into that resistance line of that trend line. So you get back above it, and that's another indication. That would be another indication that the market is getting ready to bust out here. That the lows that we saw on June 24th, even though we've seen a light volume move on the way up, we know that markets can move up or down on light volume. In this case here, it's basically setting up the C point of an A to B equals CD down, but we still need to take a look at all the signals that the market is giving to us. So the signal today is going to be paying attention to that trend line. The trend line here, the shorter-term trend line, coming off of the high from May 22nd, your next touch point being the June 18th level. That is what stopped price in its place on Friday out there. I'm going to go ahead and get rid of that. because really it was a shorter-term trend line, and at this point doesn't have much meaning. Yes, you can go back and you could test that as well and bounce off of that, but we're going to go ahead and remove that, clean up this chart here just by a tad. So we've got the trend line that we're going to be paying attention to. I can go ahead and remove this A to B equals CD that I had to the downside. Now, if this really is a breakout, what has to be cleared here are a number of different hurdles. Inside the S&P 500, it's going to have to clear the hurdle of the June 18th high. So 1654 is going to be an area where you should see some resistance. If we take a look at retracement levels now, coming from the high of May 22nd down to the low of June 24th, that's what we're really paying attention to. What we can see is the S&P right now trading above the 0.618 retracement level, 1638.72. Today's close is going to be important because if it closes back down and rejects the trend line, all that it will have done is tested an area of resistance. And if it closes back below the 1638 level, then you'll have nothing more than a 0.618 retracement move out there. If, in fact, you get a close above that, it says that your next resistance point is most certainly going to be the high of June 18th. Again, in the S&P 500, you're looking at 1654. And just above that at 1660, happens to be the 0.786 retracement. So take a look at the chart out here and take a look at three beautiful patterns, all that are actually drawn in different colors out here. In fact, if you are watching us on Tiger TV, you can see the light blue pattern. That was the first Gartley buy pattern that had set up. Market went ahead and it bounced up, and it created a Gartley sell pattern. That was the high here from June the 18th that we're going to be paying attention to. And then that went ahead and formed a Gartley buy pattern on July 24th. So we're going to go identify what that next pattern may look like inside the S&P 500 if, in fact, this is really a breakout here. Because these patterns, and if you're just listening to us on the radio, or your mobile device at tfnn.mobi. Thank you so much for doing that. In fact, I want to say thank you to all those folks that are now test driving Mastering Probability. It was a slew of you. And if you didn't get a chance, folks, you know, the offer really expired on last evening, but it's going to take, it'll take a day, maybe half a day for the programming staff, just depending on what is on their plate here today, this morning, to go ahead and remove that link. I haven't checked the homepage at tfnn.com. It probably is still up there. So if you didn't get a chance to test drive that, that's a 2-week free trial, absolutely free, no charge to your credit card or anything like that. Go ahead and take advantage of that program before it goes away, before it's removed from the website. But thank you to the so many of you that actually have went ahead and made a decision, and you're test driving that for 2 weeks. So I really do appreciate that. Now we're going to take a look at the next pattern here. If this is a breakout, where's the next sell pattern that would show itself inside the charts? Now, we're going to take a look at the A to B equals CD pattern. So I'm going to come down from the May 22nd high, all the way down to the low here on June 24th, and we're going to identify that somewhere right around the 0.786 level. So here's the first pattern that I would draw in here. That would be, and let me see if I could, well, I'll come back and I'll change the colors in a moment. So we're just simply going up to the 0.786 level. But if we take a look at that B to C swing point that may have formed here, that was the retracement back on July 3rd out here, the low being 1604.57. What we also want to do is we want to go ahead and measure the expansion level of that B to C area. And what we can see is just above the 0.618 retracement, the 0.786 retracement, which was at 1660. At 1660.227, that becomes our 2.618 expansion. So 1662 would be the likely area if there is any kind of breakout of this trend line out here. So let me draw that pattern in here, and then I'll see if I can find, of course I can do it. I can put any color I want on my screen. So that would be the next pattern if, in fact, we see the S&P 500 break above these areas. But remember, these trend lines that I've drawn in here, you have them. All kinds of traders have them out there. Let me see. Let's do this. I wanted to come back to here. Let me go fill this in, and let's pick out a color. Let's pick out a color that we don't have out here. What would be a light color? Let's pick out something light enough here. I know you don't want to spend. How about a really light yellowish pattern? Let's see if I can find something like that. It's not even yellow. We'll go with mauve. I don't know what color that is. It didn't even hold. Give me a second here to pull that back up. I don't know why that didn't work, but right about there. Say OK. All right, so Steve-O's having a little bit of trouble. We're going to go ahead and just make that yellow just to be done with it. There we go. So I'll go ahead and I'll change this one to a no color. and that will make it easier for you. So then we get rid of that. That way, if you're following along, you know what, during the break, I'll go ahead and recolorize all these patterns because all that's doing is, I'm going to just get rid of that one. There we go. Okay, so now what we're taking a look at, you can see you got a 2.618 expansion, a 0.786 retracement, but the real question is that would that be your A to B equals CD up pattern? And I don't think that it would be. But let's go take a look at it. Your 8-point being the June 24th. Now, this would be violating all principles of volume. This would be saying, hey, doesn't matter that you passed a B point on light volume, doesn't matter that you're moving up on light volume, and your 1-to-1 A to B equals CD, that would take you all the way up to 76.80. So if this is a breakout, your next sell pattern in this wouldn't occur until you get to about the 1661 to 1670. Did I say 76? To 1670, where you'd have your completion of your 1-to-1 A to B equals CD. So that's on the S&P 500. Let's go over and let's take a look at what we've got volume-wise inside the ETF structure, inside the SPYs out here. And as we take a look at the SPYs, now the SPYs, I still have that downtrending line off of the highs from May 22nd. But we're going to go ahead and get rid of that. We're going to take a look at what the SPY here has done this morning. Now, it's going into this downdraft from June 19th out there. Again, that had 206 million shares to the downside. Of course, the real nut is the 321 million shares on June 20th. So far today, we've been trading for about 45 minutes, and you've got decent volume. You've got 30 million shares. Of course, on Friday, it only did 122 million shares. So it does not have the type of volume that would be enough to take out the 206 million shares, not unless volume really picked up to the upside here. So if we take a look at where is it, if you get a close inside this bar, though, this bar being June 19th, I don't care light volume or not, that always sets up a move to the 0.786 retracement level and also the test of where the SPYs broke down. So that's going to be either your June 19th high at 165.89. That's going to be your June 18th high at about 165.99. And we cannot overlook the mere fact that we have the May 22nd bar, the low of that bar is 169.07. So about 1690 on the S&P 500. That would also be a test. That's got 243 million. A test of the low of that and a rejection could be the area of where it would extend to. But at first it's got to work its way up there, and that has not occurred here yet today. And we can see the volume in the move out here is not exactly compelling behind the price movement. Price is compelling, but volume is not compelling yet behind this move. As long as we're inside the ETFs, let's go take a look at the IWM, and then we'll take a look at the Russell 2000. So if we look at the IWM here, I'm going to go ahead, and this has also formed some nice patterns, but I'm going to go ahead and get rid of these patterns here, and we're going to start over on this chart as soon as I can do this here. Let me hit the proper delete keys out here, and so we'll clean this up just a bit and take a look at what the Russell 2000 is doing. So May 22nd, key reversal session inside the market. Let's draw a black line across that. The top of that level is 100.38, 68 million shares. So far, what we have seen is a test of that area, 100.40. 7.5 million shares. This is going to be one of the key charts that we're going to be paying attention to today, the IWM and the Russell 2000. We're going to be seeing if there's a real breakout today, we'll see a close above 100.38. You do it on more than 68 million shares, and then you've got conviction behind the move. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve, take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow up 111 right now, S&P up 10, but it's the Russell 2000 we're going to be paying attention to. It's up 4 points. It's trading out at 1,009.67. So we're going to go back and forth between the Russell 2000 index. We're going to take a look at the Russell 2000 futures contract, and we're going to take a look at the IWM and just take a look at the different patterns that we have out here. Inside the Russell 2000, that's the index we're taking a look at right now. What I'll do is I'll pull this chart back a bit here, and you're taking a look at, quite frankly, you're taking a look at two different price channels. You're looking at the red one, the red lines out here, the diagonal lines. That is a price channel here off of the March 2009 lows. You can see price here is traveling with inside that, and there's a sub-channel to the upside. These blue lines here, that price has been traveling in ever since the bottom of that red rising price channel, meaning the November 16th area, was hit out there. So those price channels are very key out here. You can see the Russell 2000 way away from the lows of that price channel, unlike the SPYs out there, but we're going to focus in on the Russell. Now, what we can take a look at here is there was a beautiful 0.618 Gartley buy pattern that had formed here on June 24th. Now, as far as relationships, Fibonacci numbers, it was a 0.618 retracement coming off of the April 18th low, 898.40, all the way up to that key reversal session on May 22nd. Bearish engulfing candle as well. Had the whole thing, that top, 1,008.23. You can see you're trading just above it right now, slightly 1,009.73. Makes a 0.618 retracement on June 24th as it gets down to a low of 942.79. Our B2C swing point here was nearly a 1.618 expansion of that level, not quite, but very close. So you've got good Fibonacci numbers coming together at the bottom of that little rising price channel off of the November 16th area. Now, as you know, the ultimate outcome of any Gartley pattern, buy or sell, is that it actually turns into an A to B equals CD up. Well, that's going to be very key when you take a look at the Russell 2000, because a close above 1,008.23 today says, you know what, this could be a breakout to the upside. The Russell 2000 has been the strong hands inside the marketplace as of late. So, if this is a breakout here of the Russell, and therefore that would be saying that this 0.618 Gartley buy pattern actually turns into the ultimate pattern, which is your A to B equals CD. That means we're going to take a look at our A point being the low here from May 18th, April 18th, my apology, your B point being the high of May 22nd, and your C point being the June 24th low, 942.79. Your 1-to-1 A to B equals CD inside the Russell would take it to 1052.81. That would be the breakout, and as it gets up there, 1052.81, it would run right into the top of the rising price channel here that was coming off of your November 16th area. So that is the most bullish case scenario that you would be taking a look at. And in my opinion, it would be the Russell 2000 where you would be taking a look at being in long positions because you're at all-time highs. You got clear sailing to the upside. It has been the strongest of all the patterns out here coming off of the retracement. What I mean by that is inside the Russell 2000, all that was tested was the May 3rd low, that gap up, which was the low of about 946.94 out here. And that's what a breakout inside the actual index would look like. If we go take a look at the ETF structure now again, we'll go back to the IWM. I'm not saying this is going to happen, by the way. I'm saying we got to take a look at, always, you need to take a look at both sides of the patterns out there. You need to take a look at the bearish case. You need to take a look at the bullish case. On the bearish case, I can tell you if you get a reversal today, you get more than 824 net decline in issues inside the New York Stock Exchange. I can tell you who has the ball, without question, with conviction, and that would be the bears. But right now, they do not have the ball, and the bulls are moving the ball downfield. And downfield now, inside the stock charts that we're taking a look at are going to be the small caps, the Russell 2000. We're going to take a look at what are the strong hands doing. Well, now we're taking a look at the May 22nd swing point high inside the Russell. You're looking at 68 million shares. Today so far, you've done 8 million shares. You need to see that level taken out with conviction. Why? Because as I was just drawing the A to B equals CD point, remember, we're taking a look at the same thing out here. That same thing being the Russell, when it came down and tested May 3rd, that had 51 million shares, and the June 24th test was with 58 million shares. Conviction, but not a ton of conviction on the way down and on that test. So this becomes the potential B point. Remember, any Gartley buy or sell, in this case here would be a buy pattern, the ultimate outcome or objective is at your D point of that. And what I mean by a D point of that, I'll just draw that pattern in here. We'll just I'll draw that pattern in, and then when we come back from the next break, we'll just go through this again. But here would be your 0.618 Gartley buy pattern. This point right here of June 24th, that is the D point. That is your A to B equals CD down that converges with your 0.618 retracement. But that ultimately could become the C point of the A to B equals CD up. The confirmation would be a close today or anytime above the May 22nd high, 100.38 with more than 68 million shares. That would take you up into the price level of 105.09. 877-927-6648. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 110. S&P is up 11 right now. Gold up $22.20 at $12.35. Silver is up 35 pennies at $19.09. Light sweet crude back 50 cents right now. Not a lot of give there in that light sweet crude contract. We're going to go take a look at the Qs out here. Take a look at the NDX 100, the diamonds, the Dow. We'll go ahead and finish off the indexes. Then we'll take a look at maybe gold, silver. Couple other things out here. So we're taking a look at the Qs. Now, the Qs here gapping up this morning, trading into the downdraft session from June 19th. Now, the real benchmark for volume is going to be your June 20th level. That had 60 million shares to the downside. Started here on June 19th. That had 43 million shares. You are up there today with your first hour of trading at a volume level of 6.6 million shares. So you're at about a 40-ish million level if, in fact, the next 5 hours of trading 5.5 hours of trading, we're to maintain this volume level out here. That's normally not what takes place out there. So it would appear you're coming into the swing point here from June 19th with light volume. Now, you are up above, not you, but the Qs are up above their 0.618 retracement level. In fact, they opened up just slightly above that area. That 72.73 is where you're trading here right now. So inside the Qs, and you can see the volume on the way up. We're taking like the red line, horizontal line going across my screen here. That happens to be the breakdown session, the gap area. That looked like to me the markets wanted to move into, test that with light volume, and boom, that set up your C point of your A to B equals CD down. That still may, in fact, be the case today. So, what we're going to be paying attention to is today's trading session. What I want to be paying attention to, quite frankly, is the New York Stock Exchange. And we'll get over and we'll take a look at that. So inside the Qs here, really doing nothing more than a normal move, which is coming off of the bounce of the A to B equals CD down. That completed also on June 24th, and it's made the 0.618 retracement. Just above it, 0.786, 73.71, and if it comes in and tests that swing point high from June 19th, that would be getting up to 73.68. Does it on less than 43 million shares, that would be your potential sell area. Now, what we can also see here is the bottom of May 22nd, and that really may be the target, that 73.24 inside the Qs out there. Sorry about that. Let's go take a look at the Dow Diamonds here. Inside the Dow Diamonds, they are traded out at 152.23 out here. They are also, give me a moment here, they're also now well above the 0.618 retracement from May 22nd's high down to the low on June 24th. So that says 153.01 is what they have written all over them. Volume, though, today, 1.9 million shares. That is going against the downdraft with 14 million shares. You want to talk about being light on volume, the top line number out there, majorly light on volume. Of course, you can go ahead and try to benchmark it against June 19th. That would be fine. But that is 9 million shares. So far in 1 hour trading, 1.9 million shares. You could mathematically go ahead and say, well, you could say maybe you could do 12 million if you were to maintain the same volume that you see in here right now. But that is, again, not likely the case. If we do take a look at what the Diamonds have done, the Diamonds actually have touched the low of May 22nd out there. That number, 152.35, that's got 12 million shares out there. So it'll be, I would want to be paying attention to inside the Diamonds. I would want to be paying attention to the 152.35 area and the volume, because you could call that a rejection of a significant area of resistance inside the Dow. Let's go take a look at let's go look inside some of the sectors here inside the S&P 500. Let's look at the daily charts out here. Last hour we were taking a look at some of the the weekly charts. We're going to take a look here at the energy sector, which has been a very weak link. Let's take a look at the retracement level where it is at off of the May 22nd high down to June 24th as well. And we can see right now today what it has done. It's gotten back to the 0.618 area. The 0.618 area also coincides with the breakdown gap. The breakdown gap being June 19th. That level, the low being 80.69. You're trading at 80.83 right now. The volume coming in there is 15 million shares. So far today, it's done 3 million shares. So the energy sector, which has been a real weak link out there, is actually doing pretty well volume-wise as it comes into that gap and fills that gap. Of course, it's really going against 25 million shares from June 20th. Today, it's done 3 million shares. So it doesn't have that type of volume, but it most certainly is coming into the swing point that has 15 million shares with pretty decent volume so far. So that looks pretty decent out here. A failure today will be a close below 80.69 on less than 15 million shares. That would be your failure setup inside the XLE. Let's go take a look at the financial sector, the XLF. Let's go see what that is doing out here. The financial sector now taking on the resistance area of that big old shooting star. Let me just reverse this here. Let me change this out, and we're going to take a look and see if that has tested the top and what kind of volume we're looking at. Now, this created a reversal session here on July 1st. The top of that level was $20 even Steven. You're trading $19.98 right now. It's been up to a high of $20.02. Financial sector has been the strong sector here. So just like inside the IWM, where we'll get a release of information today or at some point in time, it's the financial sector we want to be paying attention to. That was 59 million shares on that shooting star, which is the opposite of a hammer candle. It is being tested. That says, now it's only being tested once, so to call that a significant resistance line would be erroneous. But if we go back here a little bit further to the left, we can see that that resistance line really was set up here by the low of June 10th. We had a gap down from the June 10th area, the low of 1991. That is really your resistance area inside, and that has been tested. I'm going to put a black line across my screen on that. And that's really the number that we're going to want to pay attention to get information about these markets and what they want to do, and that's the XLF. So if we take a look at the low here from June 10th, you're going to see 1991, 65 million shares. That level was tested with 34 million shares on June 18th. It was tested again with 61 million shares, was tested at 61 million shares on June 19th. It was tested with this shooting star with 59 million shares on July 1st. So today, it's up over that level. You've done 12 million shares. Your 12 million shares are really going against 102 million shares, so it doesn't have that kind of volume here today. No, it does not have that. But the real key here, the XLF, is the number of 1991. You get it closed below 1991, and if you do it with less than, let's make it the easiest test, 65 million shares. It tells you just how strong of a resistance band you have inside the financials at that 1991 level. If, in fact, you close above 1991, that says that what we should see is perhaps a test of May 22nd out there, and that will be enough energy to go ahead, or should be enough energy to go ahead and lift the markets even further. That would be your May 22nd high. But right now, the key is going to be today's close, and if a close below 1991 on less than 65 million shares, some strong hands are going to be saying, well, you're up against a really strong resistance area. Does that mean you would go short? No, you don't want to go short the strongest sector inside, or one of the stronger sectors inside the S&P 500, just like you wouldn't want to short the, in my opinion, you wouldn't want to short the IWM or the Russell 2000 while it's testing its lows, or it's testing its highs, my apology, because it has been too strong. It's been the strongest of the indexes. Now let's take a look at the the technology sector. That would be the XLK out here. Let's go see what it is doing on a daily chart. The XLK gapped up this morning. Got up to a high so far of 31.37, and now that's made that 0.618 retracement of the May 22nd high. May 20th high, my apologies. It actually made a higher high on May 20th, which was at a price point of 32.31. The May 22nd high was 32.29. Yeah, so 32.31, that's the high. So I'm pretty good at math here. All the way down to the low on June 24th at 29.94. So as we, I didn't mean to do that. I meant to do this. There we go. So the 0.618 retracement, a normal level inside the technology. Now remember, the technology sector is the largest weighting within inside the S&P 500. So it's always important to be paying attention to what's going on here. 31.40 is the normal 0.618 retracement. You also, at 31.40, and it's really 31.36, that's the June 20th high. That's where the market began to break down and gap down. 15 million shares at that level, 31.36. Today, you have had a high of 31.37. So it's gotten over it by a point. So far, volume today, 1.6 million shares going into 15.7. Now, this is the largest weighting inside the S&P 500. So it's going to be key to be paying attention to this. Now, that's with Apple that is with Priceline, Google, Netflix, and Amazon to the upside. Of course, going against it here is Apple, which is down about $6 right now. But regardless of that, let's just take a look at this volume. Even if this volume could keep up, 1.6 million times another, times a total of 6.5 trading session hours, that would give you 6 million, that would give you about 9 million shares out there if this volume could keep up, and that's going against 15. So we're seeing a massive failure here in the largest weighting structure with inside the S&P 500 and an area where it broke down. On the other hand, if there's some type of big reversal today in the technology sector decides to participate in the action, what you're looking for is a close above 31.36. So I think we have things pretty well squared away with regard to what it is that we're looking for signals as to, is this a continuation, is this a move to the upside? Did we see a low on June 24th and the 6-month seasonal cycle low came in, even though it didn't hit Stevie's target out there? What is it that we're looking for? Although I do believe that we are going to see my target get hit. We're taking a look at the strength in the marketplace. We're taking a look at the largest weighting inside the marketplace to really get a feel for what's really behind this move. Because I can tell you that the move on Monday, the move on Friday, that 100-point move inside the New York Stock Exchange, that was as bogus, that was as weak as we have seen in quite a long time out there. I mean, a long time out there. So that's why I have to say, something to think about. So you've got the technology sector. The other thing that we're going to be paying attention to, without a doubt, is VIXI. As Basil has adopted, the VIX out here. He likes to call her VIXI. So we're going to take a look at the VIX. That's up 15 cents right now in a market that's up 117 points in the Dow. That should make you say, something to think about. So let's go take a look at the VIX. The number here you're going to want to pay attention to on the VIX is 1576-ish right now. That's the number of the 50-day exponential moving average, but as price moves up and down, so can that. But that's really about the range right now you're looking at, because if you see a move back above 1576, then I can guarantee you one thing. Boy, this move here to the upside, it's over. It's over and done with, and it would be cooked out there. So you want to be paying attention to the VIX. Likewise, if this continues to stay below the 200-day, the 50-day exponential moving average, then this move up here, the C point, whatever it's doing, will continue to have legs, because all moves to the upside. Inside, just go back, and you can go back. I don't care how far you want to go back. You should go back. You should prove this stuff to yourself. What you will see is when that VIX gets below the 50-day exponential moving average, you start to see a market move upwards. There are some periods where you see consolidations take place, but you don't see markets move down when the VIX is below the 50-day exponential moving average out there. So 1576 is the other number for us to be paying attention to. Let's go over here and we'll check out the world markets. Let me see what's going on inside Germany, inside London, in the FTSE. I just need to click on the proper tab out here. And as we take a look at here's the Shanghai. The Shanghai last night, all of Asia traded lower. The Shanghai here traded down by 2.5% off 51 points. It's in the top of the hammer candle, big hammer candle, on June 25th. Now, all the Shanghai was really doing so far is just working off a really oversold condition. We're talking extreme levels of oversold, and right now trading back inside the bottom of that, or the top of that hammer candle. It sets up a move potentially to 1927.42 out there. That's the low of the hammer. But I wanted to take a look at the DAX and the FTSE. So inside the DAX here today, still, all that we see is nothing more than an inside day of that big move down on July 5th. And the DAX is as weak as you can possibly get. This is a very weak stock chart out here, and this is setting up a large A to B equals CD down. So it may be that the real event that starts our markets moving back down will come from Europa out there. If we take a look at the FTSE, even though it's up at its session high, it too really is having an inside day. However, it's a better-looking candle because it's taken out the body of Friday's open out there, but still truly just an inside day out here inside the marketplace. But over in Asia, there is trouble that is brewing out there, and inside the Nikkei, it had that key reversal session after it made a nice 0.618 Gartley sell pattern out here. Great Fibonacci numbers, and this could be, so where are the problems going to come from in the marketplace? Well, we do have earnings season kicking off here today with Alcoa. Big whoop out there, but they get to kick things off. So I don't know where the problems are going to come from, but taking a look at that XLK, that's not a good sign out there. Let's take a look here at what else? I want to take a look. Let's go look at gold and silver. Let's see what's going on, and light sweet crude. Let's see what's going on out there. Inside Goldilocks here right now, you've got gold is up a total of about $20, $21.10 at $12.33. Gold here still needs to clear Friday's downdraft bar, albeit on decent volume, but it was really pulling back into a sign of strength on lighter volume. Gold will have, when gold clears the 1252.70 mark, it's at 1234. That will then confirm it's on its way up into the first target for gold is going to be 1321.50. But boy, if it starts moving up there, you're going to see a short cover and rally. That's going to take gold to much, much higher prices. We'll be back in just a moment, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's go see what the market is telling us about Alcoa. You know, Alcoa is coming out with their earnings after the bell, and let's go see if there's let's go see if there are some clues out here. So AA is the ticker symbol. I've got that up on my screen right now, and what I noticed here, you know, what is very key is understanding expansions and contractions of swing points, but also the actual candlesticks out here. Now, what Alcoa did on Friday's session was it created a hammer candle. Hammer candles are coming. In fact, it's a what I'll call a Type 1, the Type 1 being the best hammer candle that you can find out there. What I mean by that? Let's take a look at its close. It closed right at the session high out there. 781 was the high. The close was 781. So that is a beautiful looking hammer candle. Now, what also had occurred out here on the July 3rd session was we saw a butterfly pattern, a beautiful butterfly pattern. Now, that butterfly pattern that we're going to take a look at here, that's coming off of the candlestick of April 18th. April 18th, as we know, is a significant. Do you want to take a look at how weak Alcoa is compared to the market? April 18th is the low that we're using to identify retracement levels from, right? We're going from the April 18th low inside the S&P, inside the Dow, inside the Russell 2000, all the way up into the candle session from May 22nd out here. Now, how weak is Alcoa? Well, it went well below that session. In fact, what it made was a 1.272 butterfly pattern. It looks like this, and it was an ideal one, that's for sure. Because take a look at this. You make a 1.272. I'm going to go ahead and expand this up on my screen here for you. Remember, you can always catch the archive of this show on Channel 10. Makes a 1.272 butterfly, does that at $7.63, does that on July 3rd out there, and then the very next session you get a hammer candle. So it says you've got support out here. I'm going to say support is going to be that 763 level. What Alcoa is telling us is that the market is actually going to respond positively to the news out here. You see a normal move, and take a look at the numbers here. You got a 2.618 expansion of your B2C swing point. That's the low here from May 16th all the way up to the high on May 22nd out there. I'm not saying go along Alcoa, but if we do take a look at what the pattern is that's unfolding here, the market is suggesting to us that the likely outcome is that Alcoa, that the way the market's going to respond to these numbers is in a positive fashion, and that what you should see is a move up to about $8.11. Maybe it's going to be $8.40 out here as a move. That would be your 0.618 retracement of your A to D swing point. That would be a normal move out here, but that is what. And so, are we off to a good season out here? Well, look, Alcoa is doing nothing more. There's nothing more than just simply the signal. Now, it looks like there's probably two butterfly patterns out here. Let me come off of this low all the way back here at November 16th, right? Another benchmark for us to the high that was put in on February 14th. And so you've got your second 1.272 butterfly that completes inside Alcoa as well in another 2.618 expansion. So you know what? Alcoa should have some pretty decent support here at 763. And if it doesn't, folks, with those two patterns, with that hammer candle, where will price go to? Well, oh, Lord, let me go here. Let me put this on the monthly chart here. And what that would do is that would set up Alcoa to move all the way back down to the 2009 lows. How about weakness here? That would get you down to about $4.97. But it looks like right now the market is going to respond positively to the news on Alcoa. Folks, stay tuned. We got Basil Chapman up next. Following Basil, our man Larry Pesavento. Following Larry, we've got Daryl Martin, then David White from 1 to 2, and the Tom O'Brien Show from 4 to 6. Thanks so much for joining me, folks, and thanks again for test driving Mastering Probability. I believe that link is still out there, so if you were late to the party, you can still get in on that action. Remember, folks, the way you do anything is the way you do everything, and never, I mean never, become a prisoner of your past. Always become a pioneer of your future. Take care, folks. Have a great Monday. Look forward to seeing you in the morning.